Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, where news a spotlight has been thrown on some very large risks and some very large unintended consequences. But first, the latest minutes show the US Federal Reserve debated cutting interest rates more aggressively at its last meeting, although they were united in wanting to avoid the appearance of being on a path of more rate cuts. The debate caused a split over what to cut and by how much. In the end, the cut they agreed was seen as a mid-cycle adjustment, a recalibration rather than the start of a more aggressive easing cycle. They clearly are unsure how future moves will unfold. And there is much to worry about. The key issues will get debated with international participants, including our own Governor Orr, at the Jackson Hole meeting that starts today. One of those worries is that the US federal deficits are projected to swell more than expected over the next decade, according to the Congressional Budget Office. Yesterday, the US administration said they were looking at cuts to their capital gains rates and their payroll tax rates, but today they ruled these out. American existing home sales rose more than expected in July, boosted by lower mortgage rates and a strong labour market. But they're up only 0.6% above the level of July 2018, so it's a boost above expectations rather than any real growth. In Canada, their inflation rate stayed at 2% in July, and that defied the expected decline. Rising food and durable goods prices kept their CPI rate up. And China is pulling back on outbound investment, with the value of deals dropping 18% in the first half of 2019, the sharpest fall in more than 10 years. And China's monetary authorities say they are mulling official interest rate cuts and easing of their reserve ratios as a way to stimulate their economy. In Australia, a new report says their universities face a catastrophic hit if China rolls out currency controls to defend itself in the trade wars. A loss of up to $1 billion from Chinese students would hurt in fundamental ways, the report claims. And from the file of unintended consequences, the Aussie Tax Office has ruled that those who receive compensation from banks as a result of the Hayne inquiry into financial services may be held to owe back taxes for those earlier periods and will need to fix filing an incorrect tax return. Tax on more than $6 billion is involved. The US Treasury 10-year yield is still at 1.58%, little change from this time yesterday. Gold is also little change, down $2, now at $1,504 an ounce. US oil prices are a little softer today, just on $55.50 a barrel. The Brent benchmark is unchanged at $60 a barrel. And the Kiwi dollar is softer against the US dollar, now at just on 64.1 US cents. That's a 4.4% devaluation since the beginning of July. On the cross rates, we're lower at 94.4 Aussie cents, and against the euro, we're unchanged at 57.8 euro cents. That puts the trade-weighted index drifting down to 69.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.